Okay, it looks like we're live.
We're live.
We're
yay.
live. It is a hump day Wednesday. Beautiful Wednesday. I'm here with my sweet and amazing and wizardly-like friend.
Oh, I have my
You gotta
wizard
put your
hat
wizard
with
hat
us.
on. Amber Coleman from Guild Mortgage. I
Hi,
am
guys.
Laci, your Las Vegas gal, and we are here for our typical Wednesday hump day evening soiree where we discuss all kinds of good things as it relates to the world of mortgages and real estate, and also the world of living your best damn Las Vegas life. So,
But I did like the soiree world.
we're having a soiree this evening, and I need to find myself a hat. But I expect you fully to wear this hat this evening because
I got my wizard hat today.
she is the Wizard of Loans for a reason, ladies and gentlemen, and she is going to be talking to us tonight about credit.
I'll keep it there. Yes.
Just in case you need to get
just in
wizardly,
case.
right? Wizards of Waverly Place, Wizards of Las Vegas-ly Place, okay? So we're here tonight. We're going to talk to you about how to fix your credit to buy a house. Well, really just how to fix your credit anyway. I'm going to fine you $5. Her phone already went off. We're going to start like fining her for this moving forward. So if you're tuning in, if you tune into our live streams on a regular basis.
Somebody might need to help me with my fines.
I know, right? Just know that we are here for you. This is all about you. So if you need anything from us, you want to ask us any questions, we're going to get to those at the very end of the broadcast. So be sure to drop your questions like it's hot, boom, down in the comments box below. If you need to reach us, of course, there's going to be a link in the description of these. Either the post you're watching, because it doesn't, they could be watching this anywhere, So it's either the post you're watching or on YouTube in the description of the video.
We do have it going everywhere, don't
We are
we?
broad streaming across the United world of ours. So today we're going to talk about how to fix your credit. This is something that we are often asked about, and there is a lot of bad information out there about credit. Like more than I actually am really embarrassed to see how much ugly information out there is.
I think it's just because people make money, so they try to find different ways to make money off of like misinformation. Right?
And we're not doing that tonight. What we're doing tonight is we're going to give you the goods, the truth, straight up, because we want you to be able to hopefully live the American dream and buy a home someday, hopefully here in Las Vegas, hopefully with our team. So again, drop it like it's hot if you have questions in the comment box below. We're going to get to those in a few minutes, but let's just jump right into it. Amber, are you ready?
Let's do it.
Okay, so when it comes to credit, I know one of the things that we talk about a lot, and a lot of people call us and say, well, my credit score is 692, so da-da-da-da-da, and I immediately say to them, that's great that you think that's what your credit score is, but where'd you get that information? Oh, well, I have Credit Karma. Or, oh, my credit card tells me every month what my credit is, right?
Yeah.
So what is the difference between a Credit Karma service or what your credit card tells you each month versus what you guys use to determine what the loans are going to be?
Well, they're different versions of credit.
Okay.
So remember, those services, your card company is still a different version, but like Credit Karma is a service, right? They make money to advertise from you. So they're pulling different versions of credit. It's not like it's what a creditor pulls. So they have different rules on their credit than what you're going to see like when we pull our credit.
Right.
So like
let me just say that again. Okay. There are different rules. So what you see in Credit Karma and on your credit card statement, all that is not really what she's going to see. It could be worse, could be better, right? So that's why it's super important to actually talk to us, because a lot of people think they're ready and they're not quite ready yet, right?
Yeah, and I wish that every credit, like there was only one version of credit, it would make it so much easier.
Oh my God, right?
But to be honest with you, if you look at it, a lot of people make money by pushing their version that might be different than our version, right?
Well, because if they say that if the Credit Karma system says your credit just dipped, click here and pay $9.99 a month so that I can tell you how to get it better.
They're making a lot of money. And just for example, the other day I pulled someone's credit and he called me and he said, hey, I don't have really good credit. Credit Karma shows 560 is my credit scores.
This happens a lot.
It happens a lot. I actually pulled it and it was 630.
Wow.
That's a big swing,
That's a huge difference.
Sometimes but I can't say that it's always higher than Credit Karma.
Sometimes it's lower.
We see it come in a lot lower than Credit Karma's.
Right.
So like there's no rhyme or reason to it. It's all over the place.
Right.
But just to give you an example, that just happened like 2 days ago.
Right.
With the Credit Karma.
And it's been happening. We've been working together 6 years now. It's been happening since the day I met her and even before then. So this is a common thing.
6 years.
I know. I know, girl. What? 6 years? 6 years and a lifetime to go. Okay. But seriously, so what we're trying to make sure you understand is that, we want you to be getting the truth and the right information. We also want you to understand that there's no reason to be scared to reach out. We're not going to pressure you to buy a house. We're not going to make you feel bad if you have bad credit. This is the judge-free zone, and we've made a commitment to that as we work together.
We love the judge-free zone.
We love it. It is a bing, judge-free zone. We don't allow judgment to be. We've all had crap happen in our lives.
That's the thing. We've all had our own stuff. We've aired our dirty laundry how many times, right?
You don't want to know what I got on my credit right now, okay?
We don't like we've had things happen to us, so there's no reason for us to judge you. We could just help you see those things that we helped ourselves to fix it, and then and help so many other clients in the long run.
But the number one misunderstanding or really misnomer in this entire industry is that you know what your credit score is at any given time, and you're going to know when it's time to go buy a house. Even those things when you type in your information on those little calculators on a lot of like mortgage websites, that's still not giving you the right information. You have to actually go through someone who knows what they're doing and who can look at it and actually weigh all the outcomes of what's going on. So first and foremost, the difference between Credit Karma and the mortgage loan industry credit system, night and day. So how do you get over that? You talk to us. And the reason we want you to talk to us, even if you're not sure if you're ready to buy, is because the process of fixing credit can take some time. And we're going to talk about that a little bit more. And so because of that, you may not be ready to buy for 5 years, but why not start working on it today and getting yourself dialed in today? So
love it.
Nice job.
Love it.
Next one is going to be, what is considered poor credit when you're looking, not at Credit Karma and all the other stuff, but when we're looking at what you're looking at, what's a poor credit score?
So I would consider poor credit as anything under like a 580.
Okay.
I mean, but that's a big range because it can go from 400 to 580. So that is a big range. Under 540, you're definitely like, we need to help. We need to make some changes for you, right?
Or we need to help you. We need to help you.
We need to not us make changes for you. We need to help you to see what those changes are that you have to make in your life.
Right. You got to put a game plan together.
Yeah.
Right.
Yeah. But under 580, we're still going to have to be looking at getting your scores up a little bit to do a loan.
I know that a lot of the loans recently have come out with like FHA and things like that have lowered their requirements for credit, right? But the lower requirement doesn't mean you're going to get the greatest rate, right?
Yeah. So FHA, you can get a loan at a 540 FICO score.
Wow.
With 10% down.
Got it.
So that's the kicker on it.
They expect more out of you.
They want more down.
Got it.
Yeah, and they still look at things on the credit too. I've done them before.
Right.
You can still do them.
Yeah.
Honestly, FHA's rates aren't too bad, but they're you're not going to have the best rates when you're at a 540 FICO score. 580 at 3.5% down. So if you're wanting to get in with like minimal down, we want to keep you around a 580
or up, obviously above. Right. Now, quick side note: we are going to be talking about a really cool program at the end of this before we take your questions. So stay tuned. We're going to share some stuff on screen. We're learning how to use all this technology to showcase our skills. So hang tight on that. But so poor credit score, in your opinion, 580 or below. Even though you can still qualify, it's not necessarily going to give you the best experience in terms of rate. What's kind of an average credit score?
I would say an average credit score is probably between like 600 and 680.
Okay, that's average, right? But that's still a really great place to qualify, right? It's not like somebody's not going to have a 660 and you go, you're not making.
Oh, never.
It's great, right? It's still, like, so average is fine, right?
Yeah, average is good. Like with the even if you go down to a 600, you could still get a decent loan with that.
Okay.
Like in 680, you have a little bit more options available to you because you're starting to get up there in credit scores.
That's great. The reason I'm asking these questions is so you guys know is, I know I personally have had the wrong impression as to what is a bad credit, good credit, and amazing stellar credit. So we're walking through this to kind of help you change your frame of mind. And I'll be honest, when I had really, really bad credit at one point in time, under the 600 range, and I was going, it just felt like it was a daunting task I could never get done to get above 600 or even above 650.
You did great.
But I did, right? So when you know what's poor and what's average and what it really means from a mortgage perspective, it really can kind of take the heat off and make you go, oh, well, I can do that. That's only this many points, and if that's all I need, then I'm just going to do these things that we put you through.
And it really isn't that hard.
It's really not. We're going to tell you how. We're going to tell you how. Okay, what's a stellar credit score? Now, I know I have some clients that call me and say, I have a 717 and it used to be 800. I'm so embarrassed. I fell down to 717 and I'm like, that is an amazing credit score. What are you talking about? Right? So what is an excellent credit score?
Well, so good credit score, I would say would be between 680 and 720.
Okay.
Stellar. So you're going to get the best of all worlds if you're over a 740.
740. Okay. Not 800.
Yeah, you don't have to have
800.
800. You're going to get the same rate, honestly, with 800 than you would get it at 740.
So let's say that again, because a lot of people have this thing. I think it's like a ego thing. Oh, I have an 800 credit score. That's great. I have a 740. We have the same experience. Congratulations. And tell your mother I said she's welcome. Like, I don't know, right? So I think it's just really important to like not get stuck in the ego part of it and just focus on what does the 1 point extra get me? And if it doesn't get you much, then chill out. Like give yourself a break, right?
Yeah, tell yourself you did great today because you really did do great. 800 takes years to get there.
Yeah. I mean, that's
years of working on your credit and having limited credit, like one house, one installment, a couple credit cards that you keep at a low balance.
Right.
So,
and those who have 800 are up high fives all day.
Good
but
job.
Just know, like, you don't need 800 to get the best scores, to get the best rates and the best experiences and best processes, right? So, okay.
Yep.
Okay, so we've talked about what the difference is between Credit Karma and your system and why you need to make sure you call us to really find out where you stand, no matter where you are in your process. We've talked about what's poor credit, average credit, good credit, stellar credit. We definitely want to reiterate, it does not matter if you have 800. If you're above 740, you're in that stellar place, right?
Yeah, you're going to get the best of mortgage insurance if you're not putting down, if you're in the mortgage insurance world, and you're going to get the best rate above a 740.
So what does affect credit? I mean, I know collections, bankruptcies, all the obvious stuff, but truly, when you're looking at qualifying someone for a home loan, what actually is affecting the deciding factor as to what they're going to get?
Like what's making their scores move up and down?
And what's really like your process of, yes, credit is a component, right? But what other things are factoring in, and then what could be affecting their credit to bring it down?
So a lot of times what people don't realize what's affecting their credit, like I've pulled a couple people even just today, and their credit scores, their scores weren't like super good, but looking at their credit, there's nothing wrong with their credit. Like one thing that if you hit a 30-day late, 60-day late, 90-day late, those are huge on the credit. Like 130 could be 40 points.
Right.
It's huge. And then if you get up to 90, it's huge. So definitely work something out with your creditors in that case. But the biggest thing that's affecting people that I've noticed lately is the balances on the cards. So if a credit card gives you like a $5,000 balance, I'm just throwing some numbers out there, and you charge up that whole $5,000, even though you've never been late on it, you've never been late on anything on your credit, your scores are still going to be hindered by a lot because you have nothing left on that credit card to spend.
Got it.
So like that kind of thing, like you want to keep an eye on your balances on your cards. I always try to stick with the 10% rule, but even if you stay at 30% or below on that card, your scores are going to be maximized.
That's really good to think about too. And the other thing I think we've talked about a little bit is some people will call me and say, I just went and paid all my credit cards off, so my score should be super high. And it really did nothing for their score. It actually did them a disadvantage, right?
Sometimes it does. If you pay those cards down to zero, sometimes it's good. It depends on what else is on your credit, right? Because everybody's credits can be different depending on what kind of bills you have. But sometimes if you pay everything off, your scores actually go down.
See?
Like you wouldn't even think that, right?
Makes no sense.
But common sense is not what the credit bureaus look at. Right. It's almost the opposite.
They want to show that you have the ability to continuously keep a charge and pay it and be a responsible adult, I think is the whole point for that.
Yeah, they can weigh your responsibility, and that's how they score you, is based on your responsibility. If you continuously charge, pay down, charge, pay down, charge, pay down.
But not pay off.
But not pay off unless you have an obscene amount of credit cards. Then you want to start paying some off.
Got it.
But if you're paying everything off to zero, then they're not going to be able to, and you don't have a history of, like having past credit, then that's where I can see some people's scores actually dropped because of that.
And I think that's another one of the like, I wouldn't say the number one. The number one misnomer is that Credit Karma tells people what they actually have, which is not true. But I think this is one of the other ones, is that people genuinely think, I'm just going to pay off all my credit cards and now I'm good to go. No, it absolutely is not the best thing. So that's why we really just want to urge you to, if you're even thinking about buying or just want to see what's possible for you, again, we don't pressure you. There's no judgment. Talk to us, because there can be a very structured plan that you put in place that shoots your score way up to high, gets you the best rates, the best this, and then you're all of a sudden in a zone you didn't even know you could be in just because she told you to do A plus B plus C. So
love
it's
it.
Really important.
Let's do A plus B plus C.
Let's do it. Okay, the other one I was going to say is let's talk about increasing our score quickly. So I've had a lot of clients call who got to move. Their lease is going to be up in 3 months. They're starting the process of wanting to get approved for a loan. And there's some stuff on their credit that's doable. You can fix it, right? Whatever that might be. But what are some tips for jacking your score up really quickly?
Credit card balances.
Credit card balances.
Just like what we talked about. Those credit card balances, you wouldn't believe how much those have to do with your scores.
Really?
So just pay down your credit card balances and you'll watch that score jump up hugely.
Don't pay it off, but pay it down. So to your point, down to a 10% or a 30% range.
Yeah,
right?
yeah. And then also, like, sometimes you have some collections that are on the credit report. Some collectors are hardcore.
Yeah.
So if you have credit cards that went into collections, or like Rapid Cash or one of those cash places, those are hard to get removed. But some collection companies, if you pay them, they'll actually give you a deletion letter.
Yep.
And they'll delete it from your credit.
Mm-hmm.
If you can get some of that negative like collections deleted, that's huge on your scores too.
Yeah. And so you guys, when you guys are putting a game plan together for people, you'll help walk through exactly how to do that.
Yeah,
you guys have even written the letters sometimes, right? And helped them with that. I know it's not always, but you help them come up with, here's what you say, here's how you talk about it when you're asking.
We'll help you. We can't really write the letters to take things off, but
I mean like when you say here's how you request to get things taken off, you're helping them with the verbiage and the appropriate stuff, right?
Yeah, because people call me all the time and say,
yeah,
what's the letter called? Deletion letter or removal letter?
Right. So you're trying to help them with the verbiage and make sure that you know exactly what to say when you call and ask for and all that. So another thing that I think you once taught me was, let's say somebody just doesn't have a lot of credit established, right? Okay. And they like my daughter, we did this for my daughter. She bought her first house with us 4 years ago or something, 3 years ago, and had no credit. She's 20 years old or something, right?
Yeah.
We co-signed for the home, but she still needed to have credit established. So you had given us the suggestion to add her name as an authorized user on our credit cards.
Wasn't it beautiful?
And it was a beautiful thing. Within 30 days, boom, she had like damn near perfect credit. It was crazy.
I think she had like 720.
She had like a 720, and I was like, wait a minute, my credit's not even that good. So she wasn't. Doesn't mean she got to use the card. She wasn't spending on the card. We had to make sure we still made the payments on time and things like that because it affected all of us at that point. But it was the coolest trick ever. And I've then learned that there are people out there.
Parents can really
help their kids out.
Really help your kids. Like when they're first starting life.
Yeah.
Just add them to one that's in good standing,
right.
one that you have low balances on, and then the one that's in good standing, and you're helping them start their life ahead.
Amazing.
So they don't have to take those high rates.
And I've even seen that there's people out there that make money doing this. Well, they're like, you pay them which please don't do this. Call us. We'll figure something else out. But like you pay them a fee because they have perfect stellar credit. They'll put you on their credit card as an authorized user for 60 or 90 days, and then you're taken off of it. But that gives you that established credit. I know a lot of people that I've had friends ask friends to do it for them that have good credit, and it's pretty amazing. You know, honestly, I just get really excited when I see those little tips and tricks that a lot of people don't know about. So what about long-term tips for keeping your score high? You know, we've talked about credit balances. We've talked about getting things deleted. What happens if I have a bankruptcy? Like, what happens if I have something yucky happen? You know, well, what are the timelines and the things like that I can work toward to keep those credit scores going higher?
So the bankruptcy, a lot of times right after you have a bankruptcy, you can lift your scores up to where you can get a house pretty quickly after that. You have to wait 2 years.
That's not bad.
But right after like a bankruptcy or foreclosure, or anything that was major on your credit, any public record, immediately open up a credit card.
Nice.
You know, so you can start working that system.
Doesn't matter what the interest rate is, just get one open.
Yeah.
Right?
And then what I've seen is like once you're about 4 or 5 years out on the bankruptcy, you can start if you like work the credit cards and work that system really good, you can start getting your credit scores up into the 700s.
Wow.
What I've noticed though is right when that bankruptcy falls off your credit, which is 10 years, 800 all day long. That's how much like I noticed it was about, you'll see like 719, 720 sometimes,
right,
when you're trying to maximize the scores after a bankruptcy, but the minute that 10 years happens, it's off. So
I love it.
So that must be, about 70, 80 points just having that bankruptcy on there.
That's awesome.
Causes.
But from a long-term perspective, being really cognizant about setting up auto pay for things like that, making sure, I'll be honest, like today, actually, I had an auto pay issue because I had forgotten that I had a new debit card sent to me, and I forgot to go back through
I
and
hate when that happens.
Fix the auto pay. So I got a phone call saying, "Hey, you missed a payment."
That's
and I was like,
grateful for the phone call.
Oh my god! I was like, what are you talking about? And I said, "I'm not late. You're not credit reporting. Nothing." She said, "No, you're literally like a week late. You're fine." I was like, "Oh my god, okay." But it's like these moments where you really have to be cognizant about it. Make sure your credit's a priority. I think that's the number one thing from a long-term perspective. It's okay to use your credit cards. If you have to charge it all the way up because you want to buy something, great. Pay it down though, and things like that. But be cognizant about when you're purchasing large items and large things. Yeah. Counter to when you're planning to buy a home, right?
Yeah, because just remember, like the amount of money you pay on that credit card, you could pay that item off.
Right.
Like if you were to buy let's go say you went and bought like a $2,000 TV, by the time you paid interest on minimum payments, you would have paid for that TV three times over again. So
it's only good to use that big credit card when you're going to make chunk payments to get it paid off and get it back down. It's almost like just to build your credit and also to maybe get the points or whatever you're trying to get off of the card.
By all means, use the points. Work the points.
Take advantage of it for sure.
Yeah.
Let's talk about game plan. So we talk about game plan a lot when we talk to our clients, when we do these live streams. It's kind of one of my favorite things that you do.
You like the game plan?
I do, because I don't know I don't know any other loan officer who does it, and I'm sure they do, right? God bless you.
Oh, thank
Ooh,
you.
my allergies are catching on to you. But
We traded places.
But you are the most creative, wizardly like. That's why I bought you the wizard
I got my
hat.
wizard hat
Put
today.
it on. Wizardly like. You're
You're gonna
just
ask me a
so.
wizard
I am
question?
going to ask him. Let's
Okay,
talk
here we
game
go.
plan. You are the most creative lender I've ever
Do I
worked
look
with. You look
ridiculous right
so
now?
adorable. You're very Fantasia-like right now. Like, I need you to have the wand too. We need a robe for you next time.
Oh, yes. Okay.
So-
what would you need?
Game plan. Let's talk about a game plan for someone who needs to establish credit for the first time ever. So we gave a few tips just a minute ago, but what else would you say?
Okay, so who needs...
So to establish credit, is this stopping the brain
I
waves?
gotta let the brainwaves flow. Okay?
So what about, we had once talked to a client, I believe, who needed to get credit. They were either new to the country or they were young like my daughter. We talked to them about finding someone to put you on the credit card as an authorized user. And then there was something, a secured credit card, I think you had mentioned.
Actually, I think, so there was a client that just recently moved here from out of the country, and I just talked to him this week and they were ready to go. So when you're just establishing credit, like the game plan is right when you get here, right when you turn of age, go out and get yourself credit cards.
Right.
Like a lot of times they'll say, you can't have credit because if you've ever had bad credit in the past,
Right.
But they'll always give you a secured credit where you're putting up your own money and then charging back on your own money. And then once you've had a few months of doing that, then other places will start giving you credit. So I would say get up to 2 or 3 credit cards, work that ratio system, and then you're going to be able to start getting stuff.
And your bank is a great way to start with that as well, because they'll just use it from your bank account. You put $300 in a secured account. You charge to the card. It's your money you're charging, just like a debit card, but it looks as if you're charging it to a credit card, and then you're paying it off with the money from the other account. So it's just a really cool way for you to start to immediately build credit. That also works when you're trying to fix credit, right? Like say you can't get a regular credit card. That's a really good way to start over when it comes to like kind of rebuilding your credit, right?
Yeah, because here's what I always tell people when I'm looking at credit. Sometimes life happens. So don't
it always
feel bad.
happens. We mean
Life
sometimes,
happens.
girl, every day.
And when life happens and you can't pay your bills because you have to eat, then thank you for eating. You know what I mean?
You're still alive. It's okay. Tomorrow is another day, right?
Time will heal all wounds.
Yeah.
The older things become, the more time will heal it. But where some people get messed up is they get scared to open up anything new because they don't want to be rejected, right?
Yeah, I think the ego plays a big role.
It probably does.
Being judged plays a big role in a lot of this.
We don't want somebody
There's
to
no
treat
shame.
us bad. Yeah, and there's no shame. This is when you're talking about credit, it's your credit. It's all about you, right? And advocating for yourself.
And nobody knows what you've been through. Nobody needs to know what you've been through. It's up to you to be able to look yourself in the mirror every day and say, it's my turn today. It's my day today. I'm going to start over today, right?
Exactly.
There's no shame in this game.
Yeah.
We have all had crap on our credit. Me, Amber, all of us. And that's why we just believe so wholeheartedly in the no judge free.
Yes, and life happens. So when you're looking at credit, if you have a bunch of negative stuff, you got to look at it like a balancing act, right? Yep. So if you have a whole bunch of negative stuff, your scores are low. You have to have positive to offset that.
Yep.
So that you're evened out, right? So like if you've had life happen and something negative hit your credit, then balance it out with opening up a secured card if that's all you can get, or another card, and be responsible on that card. So meaning keep the balance low. Don't get it to spend, get it to rebuild your credit. Like change your mindset on that. And you're balancing out the bad stuff.
Yep.
And pretty soon that bad stuff will become old enough, because remember, time heals all wounds, right? So that bad stuff will become old enough that the new stuff's going to take more precedence on your credit, and your credit scores are going to start going higher and higher.
I love it. Let's talk about someone who has what really do medical bills, let me start over. Do medical bills really affect credit as much as to buying a home versus like late credit card payments and high credit card debt? Or do medical bills really carry a lot?
They're not supposed to. Like recently they've passed things on medical bills where they're not supposed to be. If there is zero balance, they're not supposed to be hindering your credit.
Got it.
If they have a balance on it, then they could still hinder your credit.
Right.
And that might be a good thing to play with, because sometimes the reason why medical bills will sometimes give you deletion letters and delete from your credit is because a lot of the billing systems at the medical places aren't that good.
Well, and I think what I think you've taught me, another game plan, this is why I asked that question, is another game plan is, let's say I have, tons of medical bills because I had a horrible accident, whatever, right? Like I've got them too, right? You've got medical bills on your plate. I don't want to pay that full medical bill balance. I don't want, it's in collections. I don't want to pay it. You taught me that almost always, in fact, I want to say always, and I'm just going to put it out there, you can negotiate those down to sometimes 5% or 10% of what you owe, right?
Oh yeah, girl,
So,
negotiate away.
and then guess what?
I'm not saying don't negotiate.
No, that's been one of your game plans too, is what I was saying, is like one of the other game plans for someone who needs to eliminate issues off of their report is calling, asking for deletion letters and explaining what happened, whatever, paying them off, right? You've got something, offer to pay a percentage. Like almost always, if you offer to pay a percentage of whatever it is on your credit, they'll give you a deletion letter most of the time. You got to ask for it. You got to really ask for it.
And sometimes 3 times.
Sometimes 9 times, actually. But be relentless. But you know what? But I think it scares people into thinking that they're never going to be able to buy a house because they have $20,000 or $50,000 in credit card bills or in write-offs or something that's crappy on their credit from medical bills or whatever, right?
So keep in mind this too. So medical bills don't really count. We don't count those towards like you don't have to get those removed. It affects your credit scores. So I'll tell you too if it's affecting your credit scores. But when you're doing the loan, if you say you had something bad happen medically and you had just so much hit you and you didn't have insurance and blah, blah, blah,
right,
you don't have to pay those off to get a loan.
Ooh.
If the automated system gives you an approval.
Right.
The other thing too is if, like, say you had a credit card go to charge off, if it's in a collections and it's not a medical, then if it's over $2,000, a lot of times we have to add a certain percentage onto your debt ratio. So sometimes that can hinder what you can get on your debt ratio.
But most of those are negotiable. You can call and negotiate them down. Yeah.
But charge-offs, we don't have to count anything against the debt ratio on those.
I love that.
So charge-offs are different.
So there's different game plans for different scenarios, and that's why I kind of walk through that. There's game plans for people who need to establish credit. There's game plans for people who, like me, who had to completely start over and like bankruptcy, things like that, and start from scratch and rebuild from scratch. And there's game plans for people who just need to eliminate stuff to either up their credit score or to get rid of or reduce balances on some of the things so that they're not affecting you negatively, and then some, right? So, so the reason I wanted to outline those 3 options for you guys is that, to showcase that everyone's scenario is different. We've seen it all. We've heard it all. Trust us. And this is the lady that you want on your side when it comes to doing the right things and the right steps necessary to figure out what you want to do.
I'm happy to be on your side.
If you never want to buy a house, first of all, that makes no sense. But if you never want to buy a house, that's okay. Still, maybe make the phone call because, having these tips and tricks and increasing your score is going to help you better in life all around, right?
Yeah. Yep.
Okay, so those are our questions for that. We're going to jump into your questions here in just a minute, but we are going to try to do something fancy for the first time ever. We wanted to talk to you about this Save with the 321 Home Plus program.
Look at how fancy you are.
I know, I feel kind of fancy right now.
I know.
Okay. So I'm going to make this bigger so we can actually see what the hell we're doing. But so we wanted to talk to you about this. We're excited because each and every week that we come live to you guys, we're trying to really launch a new program because there are thousands of programs available. There's thousands of loan programs as well as free money programs happening all the time. And there's almost too many for us to continuously showcase to you. So we wanted to talk today specifically about the Save with the 321 Home Plus. Go.
Okay, so this program is amazing. And I'm going to tell you like an example of what we did on this one, okay? So it's called the 321 because it's a conventional loan putting 3% down payment. A lot of people think you have to put more down on conventional, but there's first-time home buyers, or if you fit into certain incomes, you only have to put 3% down.
Love it.
And then plus you can receive a $2,000 lender credit plus $1,000 to $2,500. So all of this depends on what your income is, what your FICO score is, what all of that is, but a lot of it's really income. So for an example, I had a client that we closed, I think it was a month ago or maybe a month and a half ago. I can't remember when. But when I pulled her file up, the seller was paying some of her closing costs. She was coming in with some money down, but she didn't like the rate. And I looked at her income and I said, dang, let's try to see what kind of free money we can get. Because a lot of times, if you're looking at the grant program that the states put out, those have a specific rate on it, right? This doesn't. We could utilize money to be able to buy these rates down if we wanted to. So what I did is I went to this 321 program and we were able to get her $4,200 because remember it's all about like how much you make, so it differs depending on how much you make. So we were able to maximize hers to $4,200 that helped her to be able to get that towards, she wanted to choose, she chose to buy down her rate with it, but you could choose, to help with your down payment with it, help with your closing costs with it. There's a lot of different options, and that was money that you would have normally not gotten.
And that is money that I guarantee not another lender would have thought to go and look for and ask for, because she's a dog with a bone. I'm telling you, she will not stop.
I have my little
Sorry,
thing.
she's a beautiful fairy with a wand, and she will not let go. So anyway, so I'm going to put it back up on the screen just for a moment so you guys can take another look at the requirements. This is the 321 Home Plus program. This is one of many programs like this. And I want to just reiterate, we've been the only voices out there for about about 8 months now, talking about now is the most juicy, crunchy, amazing time to buy, because it really is. Because so many people are looking, saying the rates aren't great. I had a guy reach out to me today on LinkedIn. The rates are horrible. Why would I buy now? And I said, well, why do you give a crap about the rates? And he thought I was crazy. And I said, here's why you don't give a crap about the rates. Get whatever rate you can qualify for, and then we're going to ask your lender, Amber, hopefully, to tell us what we need to ask for from the seller, so you can be comfortable with that payment. So if you're telling me that this rate's making your payment too high,
utilize that seller
let me know
credit.
what you want that payment to be.
Yeah,
Let's go.
Think outside the box.
And I'll say to her, what do we need to get the payment down to this? And she'll say, you got to ask the seller for this. And we go and ask for it, and we negotiate.
And we do it all day long.
All damn day. And we're getting it almost all damn day. We're getting closing costs covered for you, more free money. We've got these awesome programs that are giving free money on top of lending, amazing loan programs. We've got all kinds of really amazing things. But one of the coolest things that's happening that almost nobody's talking about is that the seller will buy down your rate for you. So if you need the rate to be, I'll make it up, 4.925, whatever that is, and you're qualifying currently for a 5.925, then we figure out how much money we need to ask for to make that difference up, and we ask the seller, and most of the time we're getting them to say yes, plus closing costs. So
love it.
It's an amazing time to buy, I promise you, and it's going to dry up because we're getting very busy.
It really...
People are listening.
When we said, I think we started saying this in November. December, January, February. Those are the months.
Juicy, and I'm crunchy granola.
Like, I looked at the pre-quals that have come in this month. Yeah. It's more than's come in January of 21.
Yeah.
When rates were 3%.
When rates were 3%.
So that's how
people
much
are coming off the fence. People are stopping.
At some point, the contracts are going to come in. Yeah. And the sellers are going to pull back incentives.
Yep.
So
juicy,
crunchy right now.
Right now. And so I don't know how much longer it's going to last. I will reiterate this. This is not us trying to light a fire and pressure you. We're just trying to make sure you don't miss out if you have the opportunity to take advantage.
We're not really pressure people.
We don't. I don't have any time for that. Listen, I'll pressure. Someone wants to take me on a date, I'll put some pressure out there for that. But aside from that, no, there's no pressure out there in the world. Seriously, I would love to go on a date if anyone wants to
You get so many dates.
No, I don't. I don't remember the last time I was on a date. Anyway, I did not mean to turn this on that. We're going to turn, now it's going to time to ask your questions. What are we doing here? All right, let's go over to your questions. Again, if you have any questions for us, this is for you. Drop it like it's hot in the comment box below. Let's jump over here and say hello to our followers today. Alan Oshiro says hello, ladies.
Hello, Alan.
JW says good evening. How are you doing this evening? We're doing great. Thank you for asking.
Hey, JW.
Anthony says, hey, Amber, can't wait to close next week.
Oh, I can't wait to close you next week.
Congratulations. Oh my gosh. Oscar Love says, tomorrow, I'll be there
we're
tomorrow.
Excited to see you, Oscar.
Hello, neighbor. Good to see you. Can't wait. Let's see.
I think Oscar said he just got a job, too.
Oh, he did. I'm so excited for you, Oscar. JW is asking, how was your event last night, the Young event? Oh, JW must be following me on Instagram. I shared, last night I got invited to a Young Executives event.
I noticed your cute shirt.
Well,
you were going.
I was gonna go, and then here's what's funny is they invited me to a Young Executives mixer. First of all, my son said, are you going to a rave? I don't understand what you're doing. I said, I'm going to a mixer. I'm going to go mix and mingle with people. He said, oh, I thought you meant mixer. So that was super cute. My son thought, he looked at what I was wearing. He goes, you're going to a rave wearing that? I was like, what do you mean? But I said, so what does it qualify as a young executive? And my friend said, 30, 35 years old or younger. And I was like, oh.
You're like, I'll be there.
I will show up and see if somebody, I can, be a cougar in the room and roll through and see if I can pick myself up a young hottie. But no, I'm well over the age. I pretty much should not be there. And she said, just show up. Nobody's going to notice. So the problem was I showed up and they had moved the event to another day. So I didn't even do the event. I ended up going out for drinks with my friends. So it was all good.
You got something out of your
It was definitely good. How's the weather been in Vegas? What's your take on the weather in Vegas?
Well, earlier this week it was so crazy windy.
And cold, okay?
And
cold.
Freezing cold. Right now I think it's okay though. It's like mild winter. What do you think?
It's always a mild winter. It's in the 40s, 50s, roughly, mid 40s, low 50s. But when the wind kicks in, it feels like 20s.
Well, I think Monday it probably wasn't.
I was not happy. I had hail happen on my balcony last week, actual rain and hail, like a storm. It was crazy. Anyway, it's not been great. I'm not happy. I would love it to be swimsuit season really quickly. So that's me.
But we'll take the rain.
We'll take the rain. Veronica says, hello, ladies. Do you know anything about some builders who are building homes to rent? Is this happening in Las Vegas? Because in some of the states, this is going on. Really good question, Veronica. Yeah. It is happening. It's not happening by and large. We only have, I think, one builder in town that's dabbling in that world. I think you work with them a little bit, right?
That they haven't started dabbling, but there is one.
There's discussion.
There is one that
Got it.
dabbles in them. Yeah.
Not a huge fan of it. I think that they got, here's what happened is, the economy got dry last year, and all these builders were stuck with a lot of extra inventory just sitting, right? And so, the issue at the time too was there was not enough rentals out there for the people that were coming into town. So the rental properties were going up, and all these people who couldn't qualify to buy, there was just like this weird thing. So I think these builders got a little nervous. The one that I know that was starting to dabble, and started to consider renting out the standing inventory instead of selling. I don't believe that's really as much of a thing now because we are seeing things pick up very quickly. But it's definitely been something that I think one builder has dabbled with a little bit. Yeah. So
there are companies though that have approached me that they're buying houses and then like you can rent.
Oh, doing the rent to own or whatever. Yeah. I'm not a huge fan of the rent to own programs either, but we'll look at anything for you. Like if you're considering buying, if that's the kind of thing you need, great. The problem with those programs though is that you're really not tied to anything until it's too late, and so the market could be going up, but I just don't think that it benefits the buyer. I think that there's better ways to go about it. But great question. So JW is saying, so having too many credit cards is not good? Question mark. Good question.
Yeah, sometimes. So like when I'll pull people's credit that have 10, 15 credit cards going on, it's going to start hindering your score because you have too many open, especially if the balances are starting to get high.
Because it's risky.
Some of them.
It's risky, right?
Yeah. So I would kind of pick the ones that. I would probably pick between like 3 and 4 if you're going to max it out, and do the ones that give you the most points on it.
Good point.
Maximize those ones and try to balance out the ratios on those cards, that it's not too much that you have to be working with.
Good question. Paul Carl, welcome back, sir. Always happy to have you, and he always has the best questions.
Oh,
hence this one. But which FICO score is the one to look at for real estate loans? A full FICO report contains many different scores, such as FICO 9, FICO 10, FICO 10T, Mortgage 5, etc.
Oh gosh, I think ours is version 9. But you know what? Let's talk afterwards. Like if you have we probably don't have his information there, but I can.
I feel like we did at one point.
Yeah,
Paul, will you reach out to us?
I believe ours is version 9 on it.
Yeah, so if you're looking at a full report,
us and I can look at it like why it's right there, because I'm not asked that question every day. So good job.
Told you, man. Paul Carl always bringing the heat.
Good job.
Put him to work. If for those of you who might be confused by that question, don't think that you have to go and figure it out. And the other thing too is don't be so stuck on what that number is, because it can change based on variables that she's going to be looking at. So just keep that in mind as you're looking at your scores. Aussie Expat says, weather's nice, cold, cooler temps in the sun, but it's been nice. That's right. Let's see. Sean says, hello from Seattle. My partner and I are looking to move down to Vegas early next year. Great info so far. Hey, thank you, Sean. If you're looking at early next year, then we need to be talking to you today, my friend.
Let's get your game plan
We
going.
need to talk. Even if you have perfect credit and you're ready to go, we'd love to make new friends, honestly. So click the link in the description. Let's just talk, honestly, so we can get an idea of what you're doing. And maybe you can make a trip out here before next year, and we can get to know each other and start showing you around town. I think that'd be super fun. Ben says, does a higher down payment lower the mortgage cost per month? Could you use a property company to help manage a house for rental? So I'll let you handle the first question.
Okay, does a higher down payment lower the mortgage cost per month? Yes, it does.
Yes, that's an immediate cause and impact.
Yeah,
right?
Yeah, because you're going to have a lower loan amount, and also like if you're in a mortgage insurance world, so if you haven't put down the 20%, the more money that you put down, the lower that mortgage insurance goes too. So it brings down your overall payment because you have a lower loan amount. Plus, it could bring down your mortgage insurance depending on how much more you're looking to put down.
She's a genius for a reason. The other question that you asked is, can you use a property company to help manage a rental? Absolutely. And we can certainly point you in the right direction. There are many options here in Las Vegas for property management, and there are some that are not great and some that are amazing.
I'm glad you know the good ones.
I only know the good ones. I know the bad ones too, but I only work with the good ones. So we would love to recommend those to you. We don't make any money off of doing that. We just want to make sure you're taken care of. So great question. JW said, 2 beautiful ladies.
Oh, well,
hey,
thank you, JW.
Thank you very much. Veronica says a good question. Having a high credit limit on your credit card, is that good or bad when you're trying to buy a house? For example, if your credit limit is $15,000.
It's great.
The higher the credit limit, the better it looks,
yeah,
right?
because then your ratios, you're just looking at the ratios. So your credit could be 1,000, it could be 15,000.
Nice.
What matters is the ratio. So if you have a $15,000 credit card, if you charge, $1,500 on it,
Perfect.
You're at that 10%, so you're doing great. And if you want to go up to 30%, you still have more room without maxing out your cards. So the higher the balance, the better you're going to be doing.
Love it.
Great question.
Also, follow up to that, how many credit cards should you have? So I think we just touched on that, maybe 4 or 5 at the most.
Yeah,
right?
I mean, the bureaus they don't tell you how many cards to have.
Right.
But I just noticed that people that I'm seeing that are in the high, like the 800 FICO scores, they only have a couple credit cards that are opened at high balances, and then they keep those balances low. So I'm just telling you what I've seen on, like, the people that I see really maxing out credit cards. That's what I'll see is only a couple credit cards. So if you go up to 3 or 4 max, and then keep you use it so that they can raise your balances. That way you don't have to have 500.
I love it. Good one. Good question. This one is, what about tribal loans? Let's talk about tribal loans for a minute.
Oh,
you recently got into that last year, right? A couple years ago.
So yeah, I've done a couple tribal loans. Tribal loans are amazing because it allows you to put down lesser down payment. Their credit scores go lower, so it's kind of like an FHA loan, but it goes to a higher loan amount, lower down payment, and lower mortgage insurance.
Awesome.
You have to be able to show all your paperwork for it, and then we have to put those through a specific procedure because it has to go to the tribal, go through the tribal underwriters and stuff like that. Right. But they're amazing loans.
So if you want to learn more about tribal loans,
Anthony,
if you want to learn more, if you think you qualify, we can certainly help you look into that. Amber's been digging into that of recent years, which has been fun.
Yeah, we have, and they're cool loans to do.
Brian says, if you have 5 collections that are all 6 years old and all under $1,000 each, does that affect the allowed DTI percentage? What's the average DTI allowed by lenders these days? Good question.
So if you have 5 collections all under 1,000, it depends on the type of loan. So if you're doing an FHA loan, if they're not medical collections, then you have a maximum of 2,000. Once it's over 2,000, then it affects your debt to income ratio. If they've been on there 6 years, though, they should fall off at 7 years.
Nice.
The collection should.
But if they're under 1,000, it's also really easy to call and say, hey, if it's $200, can I pay you $50 and get rid of it? And they might take it.
If they're getting older like that.
Yeah, and you can just get a deletion letter. It just depends. Yeah. But why don't you give us a call, Brian? I mean, I know that's a pretty specific question, and we could absolutely look at specifically and give you the exact right answer.
Because then we can run the debt ratios for you, because honestly, the debt ratios that we're using, there's automated systems that we're running through. Right. So a lot of times I'll see FHA, they like 55% sometimes. But then if there's things on your credit that they don't like, then they're going to limit you to a lower one.
And some of the stuff on your credit will count and won't count, right? So it's just, you have to really have someone look at it.
Yeah, so let's look at it and let's run your scenario individually.
Brian, we better hear from you. Yes. That's all I'm saying. Damn it. We better hear from you. JW said, are you into fashion? I have a fashion question. Sure, I like fashion. You can't always tell by what I wear, but I certainly like fashion.
You could tell you're into fashion.
Tracy Johnson says, I have old addresses and variations of my name on my credit reports. Does getting these removed raise your score? That's a great question.
It is a great question. I wish it did, but that doesn't really hinder your score.
Oh.
Because and people will ask, like sometimes with getting inquiries removed and stuff too. I don't really see that moving your score too much either, but yeah, great question, but it doesn't really raise your credit scores by getting some of the information that's older off there.
So don't bother with it right now.
More the balances, yeah.
All right, Veronica's asking another really good one. Of all the 3 different scores, which are the ones that the banks consider and why?
That's a great question. So what we're going to pull is Experian, Equifax, and TransUnion. And we're going to take whichever one lands in the middle because we figure that's just the most fair way to do that.
Right.
Yeah.
But then again, keep in mind the scores that is going to run through their system, which is going to spit out what actually is going to give you the yes or the no. So don't just go by those numbers. I know that even if you're not using Credit Karma, it's definitely good to always talk to Amber because she's going to really give you the zoomed in effect, right? Where you zoom in. Okay. Let's see. What kind of home should a couple have if they plan to have no kids? Oh, great question, Trevor. That's more of an advice question.
Yeah.
Happy to give it. What's your take on that?
I mean, the sky is the limit.
Yeah, I mean,
it depends on what you're into.
Yeah.
You can do anything, right?
You
can be in a sky rise.
That's what I was gonna say, high rise.
Or you can be near the lake, or you can be near the mountains. It depends on what your interests are.
What are you into, Trevor? That's really the question. Are you guys the people who love to run free in the wild naked in your backyard, or are you guys the kind of people who like to walk downstairs and have your doorman bring your mail up to your house? There's 2 very different experiences. So, and we have it all here in Vegas, which is really exciting.
That's the great thing about it. Vegas has so much diversity with everything.
I think with the no kids question, it's really what not only what kind of lifestyle, like we just talked about, but what part of town do you want to live in, right? Like downtown Summerlin, where we're sitting right now, my friends, is actually a really great area for people with and without children. It's super walkable, a lot of really great bars and restaurants, like really great bars and restaurants. And then there's also kids activities too. So it just depends. If you're downtown, not really the best place to live with kids, even though I do. He's not really a kid though, he's almost 18, so you know. But like downtown Las Vegas is a little bit more adult friendly focused. And so it just really depends. But really good question. I love that. Jojo says, looking good, Amber and Lacey. You know how
thanks,
we do.
Jojo.
Oh, Sean, they're coming in May. Oh, Sean, please reach out to us. Please click the link in the description.
Yes.
Let's meet
get
up.
You started. May's around the corner.
We'll set up a little tour. We'll put you with someone on the team or my partner or me, whoever's available. We'll make sure that we get you guys out there. And we love showing you areas of town so you can really get an understanding of where you're going to live when you come here. It makes it so much easier when we're searching. So please call us. If you don't work with us, I'm going to be really hurt. Make it happen. Okay, this is a good one from Tracy. Oh, she already put that one. I already have old addresses. This one, DR says 8 to 10 credit cards is fine as long as your balances are low, which is great. Yeah. So you're seeing people who have a tendency to get auto approved and do really well have a tendency to have less than that. But if DR is seeing low balances,
if you're looking to the low balance, like just like we talked about with the ratios, but to maximize it, you want to maximize what you have too, or minimize what you have.
All right. Jojo says, does having credit cards help your score even if you don't really use it?
Yes. In fact, that's what makes your scores. So what you want to do is you want to just use them. Honestly, you can really work the system by just using them to gain the points. So gain the points and pay them off before you have any interest hit. If you want to do it that way, if you're used to paying cash for things, you could do it that way. But by getting higher credit scores, you want to be able to utilize those credit cards, even if you're paying them down or paying them off a month, because otherwise you're not going to have anything hit your credit that's revolving like that. If you just have installment loans, it's not the best way to maximize your credit scores.
It shows that someone took a risk on you and they're giving you the leeway. So it does help your credit. Really good question.
Yeah.
Looks like I need to do these more often. I'm just finally getting a date. Look at this. Chris, it's welcome to Vegas, first of all. Chris is saying, hey, Lacey, the number, I'll give my number to my assistant so that we can get that drink finally. Yes, that will work. Thank you so much. And then I'll reach out. Sorry, been a little busy.
Chris.
Listen, you've been courting me for about a year now. Let's go. If anybody else would like to take me on a date, you can just do the exact same thing. Here we go. All right, fashion question. This is a good one. Let's see if you know the difference. What's the difference between tights and nylons?
You're asking me the question?
I'm asking us. I'm seeing if you know.
Well, nylons, you can kind of see through them, right?
Okay.
And tights, you can't really see through them?
Maybe. I don't know the answer. We're going to look it up. As a former ballet dancer, we wore tights because they had Lycra. They were thicker and they had Lycra. Nylons were meant to be skin-toned and meant to look like skin. So I think we're sort of saying the same thing.
Yeah.
So J-Dub, let me know if we said that correctly or not.
Nylons run a lot easier.
They definitely do run a lot easier. They snag easier. Sounds like a setup for a joke to me. I don't know. What's the difference between nylons and tights? It better not be a dirty joke. I'm going to be super upset.
Oh, yeah, because that went straight over our head if it is.
All right, City Boy All Out says, I'm a homeowner in Iowa and I paid off half my mortgage thinking about moving to Vegas, purchasing another house or condo. I kind of want an Airbnb out in Iowa. What are your thoughts? Oh, first of all, yes. Hell yes. So Airbnb here in Vegas is kind of difficult. We actually did a full live stream about that last week if you want to check it out. Also, we've got a whole series of Airbnb videos on my YouTube.
I love how you tell people how to work it.
We're working it out. So renting a house here, you absolutely, if you want to move to Vegas, then Airbnb in Iowa is a great idea. And you just want to look at the laws and the things like that around it in that area. If you're looking to do the reverse, please talk to us first because there's a lot of really good ways to work it and work it out so that you can maximize the experience but not get caught up in all the BS laws and some of the stuff that's going on these days. But great idea, and I'm super proud of you. Paid off half my mortgage thinking about moving to Vegas.
I know, but it looks like you're looking to Airbnb your house in Iowa.
Out there, yeah.
And then buy your house. I think that's a great idea.
It's a great idea, and it's income, so that helps with your getting a mortgage, right?
Yeah.
That works towards income, so it lowers your debt to income a little bit, right?
It does, but when you're Airbnb-ing things, it's monthly, so we have to have a history to lower your debt to income with it.
So you have to be doing it for a little while.
Yeah. If you have a long-term rental, then that's where we can. But it doesn't look like you owe that much on that house anyway.
Congratulations.
So good job.
All right, let's take a few more questions here. This one's a good one. Let's see. My Oscar says, my employer's giving a corporate credit card. Can that be used to raise my score? That is a good question, actually.
That is a good question.
If you're tied to that card, does that matter?
Yeah, most of the corporation cards though are for the corporation, so they don't put you on as an
Good question.
authorized user. Like they have you assigned to the card so that you could use it, so your name's on it, but it's not usually an authorized user.
What I would
Depending on
recommend,
how big the
Oscar, is
corporation,
if you're looking to raise your credit, definitely do the secured credit card thing, or find a friend who has great credit that can just add you as a designated user, or a what's it called?
As an
Authorized user. But I know you're moving here, which we're so excited about. I know you're getting kind of started. Congrats again on the job. Highly recommend just getting set up with a local bank or with your bank that you're currently banking with, and get a $300 secured credit card that you can just, it's your own money. So you just put $300 or whatever that amount is, charge against it, pay it off, charge against it, pay it off. That's going to build your credit just as quickly. So yeah, really good idea.
Yeah.
Ooh, my allergies are starting to kick in.
Those dang
okay,
allergies.
I know, man. Okay, Alan says, are HOA fees negotiable?
I wish they were.
No, they are not, unfortunately.
I love it how you're asking though, but I wish they were.
I wish.
But...
No, they are not, unfortunately. But we are really good about helping you understand what the history of those have been, because a lot of people get nervous about them raising to super high or being hit with fines and things like that they don't know about. So we're really good about in advance letting you know, here's the history of how often they've raised the prices over the last however years, and letting you read through all those rules before you purchase. Really good question though.
Yeah.
D. Rel says, Laci single? Yes, she is. Single, ready to mingle. Let's go. Let's see. Amber, can you explain again what is the best time to pay your credit cards? I thought you said in another video to pay a few days before the due date.
Yeah, so because what happens is most of the credit cards, they bill you. So they send it to the credit bureaus at the same time that your bill is due. So like, let's say your bill is due the 10th. Usually that's the day they're sending it to the bureaus too. So if you're paying your credit card, if it's due on the 10th, if you're paying it on like the 6th, you're giving them enough time to process everything so that it doesn't report the higher balance on your card. And then that's how you're going to keep your scores lower. Like if you're using them, you're going to stay away from that interest that you'd be paying on that balance too. But then you're going to keep your scores higher as well, because you always want the bureaus to be able to see the lower balance after you make your payment.
Oof, that's really good advice that I actually forgot you gave us at one point in time. That's
yeah,
really
I'm glad
good.
you reminded.
I'm gonna go
Thank
change.
you.
I'm gonna actually change all of my my payments
dates.
back a few days. I think I already do that, but I'm gonna confirm it. Good advice. Looks like Maximus Milia says, "Hey ladies, I'm ready. I just need a game plan."
Oh, let's get you there.
We better get a phone call, is what I'm saying.
That's music to our ears.
Please. So here's the thing, guys. When you click the link in the description, you're going to get an email, a text, and a phone call from us. So we need accurate information. A lot of times the emails go to a spam box. So we need you to be answering that phone, and we need you to be replying to those text messages and understanding that you asked us to reach out to you. Because a lot of times you guys will fill this out and then you ignore us. So please reach out.
We're friendly people.
Yeah.
We want to talk to you.
Yeah, please let us set you up. We would love to chat. We promise it's not pressure, but we're really excited to get you guys going. Congratulations, how you say it? Maximus Milia. Milia?
That's
How do I say it?
Very cool name.
It's a mouthful. I don't know what it is. Apparently, D-Rail says, Chris said, is she single? He said, not for long. Oh, we got a little dueling going on here. D-Rail says, it's kind of scary how every community out in Las Vegas has HOA fees. Yeah, we are about 85% HOA here in Vegas, 80 to 85%. But I don't want you guys to get nervous about that. You know, we are not set up like the HOAs are in California. A lot of people get really strictly stressed about, because HOAs out there are like the militia. Like it's crazy, right? They're not bad. There's a couple neighborhoods that get a little wacky out here, but they're really not bad. They're really pretty affordable, to be very honest. And we're not seeing like a lot of people jack up those rates. So don't stress about it, I promise. We all good. Okay, let's see here. Are we going for drinks? Oscar, of course we are, my love. Let me know when you're ready. We'll happily see you. JW says, were you a cheerleader before? NFL cheerleader. No, but my daughter was almost an NFL cheerleader.
Oh, she looked adorable too.
She made it to the final round for the Raiders when they were first
But I wonder where
launching.
she got those dancing skills from.
You know. I was not a cheerleader. I should have been. My mom was. My mom was a Kansas City Chiefette. Yes, she was a Chiefette back in the 60s. So y'all didn't know I came from a long line of amazing dancers and cheerleaders and all that. Okay, I'm going to do one more, and we'll go from there. Tara said, Tay said, spoke to Laci today. She's wonderful. Love you all. We love you too. Thank you so much.
Nice.
Trevor, last one. I want to live in Summerlin, so I'm into having complete privacy in the backyard with a swimming pool and in the bedroom and the bathroom. Well, I would love a swimming pool in my bedroom and bathroom too. That sounded like what it said. Summerlin's amazing. There's a lot of privacy.
We are right now.
We're in Summerlin right now. A lot of really awesome privacy areas. So if that's what you're looking for, I'm pretty sure we can find what you're looking for and find what you need. And even finally some Summerlin adjacent homes that are pretty awesome. So we are wrapping up now, guys. It's been a long hour. A really good one though. It went kind of fast.
It's been
actually.
an hour.
It's been an hour. Look at her. Wow.
I'm like, dang.
We're so excited that you keep joining us each and every week. Please tell your friends and family about us, even if they're just wanting to learn and want to learn more about living in Vegas. We want to be here for you. I'm going to be introducing a lot more live streams on my channel, so if you are not already subscribed, please do so. I'm also going to be having this girl do a lot more on her channel. So make sure you're subscribed to both my channel and Amber's. You can find all those links on the description below, or if you go to the channel, you can find and navigate that way. We just want to say thank you. You guys have been such big supporters of ours over the last 6 years.
Thank you so much. And for all your questions and your love.
We really love being here for you and answering these questions. We are going to be doing a dinner live stream coming up. She's not aware of it yet, but we are. So you can dine with us live and ask us questions. And it'll be all Q&A.
We'll go somewhere really yummy for you,
Yes,
too.
we will. So so stay tuned. If you have suggestions for where we should do dinner, drop them in the comments box below. But I think we should you should sign us off with your little wand here today.
Okay.
Like do a little swirl. Thank you for joining us, and we'll see you next week. Don't worry,
you're still talking.
I'm still talking. Hold on. We'll see you next week, and just stay tuned. We're gonna post it in advance so you can stay tuned and set the reminder. Ready? Boop.